Today, we're breaking down a masterclass in market predation. This is the story of a very calculated billion-dollar liquidation hunt in the Bitcoin market.
$118 million. That is the exact amount of high-leverage positions that were targeted and then completely vaporized from one single price zone.
And, that's just a tiny piece of the pie. We're talking billions of dollars from traders betting on higher prices, all just sitting there, completely exposed. It created this massive pool of money that the market, it just couldn't ignore.
Okay, but here's where it gets really interesting and honestly a little counterintuitive. How did this brutal flush to the downside actually create the perfect setup for the next major move higher? We're going to break down exactly how this trap was set, how it was sprung, and what it tells us about where the price is headed next. If you find this kind of breakdown valuable, do me a favor and drop a like and share this.
So, first up, let's look at how this trap was so meticulously laid. This was not some random market swing. It was a slow, methodical buildup of bait for the, let's call them, larger predators in the market.
Take a close look at what's happening here. On the left, that's from January 25th, and you can see the very beginning of liquidity building up below the price, those little faint yellow spots. Now, just fast forward 2 days to the 27th, on the right. See the difference? Look at how those bright yellow bands, which represent huge clusters of leveraged longs, have become incredibly dense. The market was basically luring traders into feeling safe right before the trap was sprung. Hey, if you want to see these patterns as they develop in real time, you should definitely subscribe to the YouTube channel.
And this all comes down to a fundamental law of the market. You have to understand this. Price is a predator, and these big pools of money, they act like magnets. So this buildup of liquidity below the market was pretty much painting a giant, unmissable target.
So the trap is set. The target is painted. Now let's get to the main event, the moment the predator strikes and actually hunts down all that liquidity.
And boom, here it is. On January 29th, the floor just gives out. Look at that. It's a clean, brutal knife cut straight down, slicing directly through all those bright yellow liquidity zones we just saw building up. They're just completely erased from the map, wiped totally clean.
What you're seeing is a textbook liquidation cascade. The easiest way to think about it is like a domino effect. The first drop triggers the highest leverage positions. Their forced selling pushes the price down even more, which then triggers the next level of liquidations, and so on and so on. It's really a feeding frenzy that only stops when the fuel, in this case all those leveraged longs, is completely gone. We post about these market moves as they happen, so be sure to follow us on Twitter for more updates.
The most crucial point is this. The hunt was a success. The long ends got wiped out. So the question then becomes, where does the predator hunt next?
This cascade fundamentally reset the entire market structure. The board has been cleared, the game is changed, and a new hunt is already starting.
Now take a look at this heat map from January 31st, after all the dust is settled. What's the very first thing you notice? All that dense yellow liquidity that was below the price, it's gone, completely cleared out. And even more importantly, look where the new bright yellow bands are starting to form. They are now appearing above the current price.
And this table right here illustrates that structural shift perfectly. Before the cascade, the fuel was all those leveraged longs sitting below us, which created this downward pressure as the market wanted to go liquidate them. Now, after the cascade, the main fuel is this new cluster of leveraged shorts sitting above the price, creating a whole new upward pressure. The entire game has been flipped on its head. If you find this kind of structural analysis valuable, please drop a like and share this explainer with someone who needs to see it.
So let's get to the conclusion, right? With the board totally reset, we can now identify the next set of price magnets with a pretty high probability.
So based on this new heat map, the shorts have started to pile in, and they're creating these big liquidity pools at some key levels. The most immediate targets are now 85,000, 86,000, and there's a particularly dense cluster building up around 87,500. These are the new magnets that are pulling the price upward.
This entire event just perfectly demonstrates this classic market principle. The market moved down because, that was the path of maximum financial pain for the longs. Now, with the longs cleared out and the shorts building up, the path of maximum pain has completely reversed direction.
So it leaves us with this one final question. With billions in long-side liquidity now completely incinerated and a fresh supply of short-side liquidity building up over our heads, is the hunt for the shorts not just likely, but pretty much inevitable? What do you think? Let us know down in the comments. And hey, subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.